Trading is a wild ride, man. Ups, downs, twists, and turns. It's enough to make your head spin. One minute you're on top of the world, the next you're staring into the abyss. But there's one thing that keeps us all coming back for more hope.
Hope is the fuel that keeps traders going. It's the belief that we can beat the odds, make the big bucks, and achieve financial freedom. Without hope, we'd all just throw in the towel and get a regular job.
But hope is a double-edged sword. Sure, it can be a powerful motivator, but it can also lead us down a dangerous path. Too much hope, and we start making reckless decisions, chasing losses, and ignoring all the warning signs.
So how do we find the right balance? How do we harness the power of hope without letting it cloud our judgment? That's what we're going to explore in this essay. Buckle up, Buttercup. It's about to get real. Let's be real. Trading can be tough, like really tough. You're gonna have losing trades. You're gonna make mistakes. You're gonna wanna quit. But hope is that little voice inside your head that says, nah, man, you got this. Keep learning, keep grinding, and you'll come out on top. Hope keeps us motivated when the going gets tough. It gives us the strength to get back up after a loss and try again. It reminds us why we started trading in the first place, to achieve our financial goals and live life on our own terms. And here's the thing about hope, it's contagious. When you're hopeful, it rubs off on the people around you. It inspires them to keep pushing towards their own goals. So don't underestimate the power of a little bit of hope. It can make all the difference in the world.
Hope is like salt. A little bit can make all the difference, but too much can ruin the whole damn meal. In trading, too much hope can lead to some serious problems. When we're too hopeful, we start seeing the market through rose-colored glasses. We ignore the risks, downplay the losses, and convince ourselves that the next trade will be the big one.
This is known as hopeful bias, and it's a recipe for disaster. Hopeful bias can lead to all sorts of bad trading habits. We might start overtrading, chasing losses, and risking more money than we can afford to lose, all because we're so convinced that things will eventually turn around.
The truth is, hope is not a trading strategy. It's not a magic formula for success. It's just an emotion. And like all emotions, it needs to be kept in check. If you let hope cloud your judgment, you're going to get burned.
So, how do we keep hope from turning into a liability? The answer is simple: risk management.
Think of risk management like your trusty sidekick, always there to keep you in check when your emotions start running high. Risk management is all about protecting your capital. It's about making sure you don't lose more money than you can afford on any given trade. It's about having a plan for every possible scenario, both good and bad.
There are a ton of different risk management strategies out there, but here are a few basics to get you started.
Always use stop-loss orders. A stop-loss order is an order that automatically sells your position when it hits a certain price. This helps limit your losses if the trade goes against you.
Don't put all your eggs in one basket. Diversify your portfolio by trading different assets and markets. That way, if one trade goes south, it won't wipe out your entire account.
Only trade with money you can afford to lose. This might seem obvious, but you'd be surprised how many people break this rule. Trading is risky, and there's always a chance you could lose everything. So, don't gamble with your rent money.
Here's the thing about trading. The market is constantly evolving. What worked yesterday might not work today, and what works today might not work tomorrow. That's why it's so important to never stop learning.
Think of trading like a video game. You wouldn't expect to beat the final boss without leveling up your character, right? Well, trading is the same way. You gotta keep learning new skills, strategies, and techniques if you want to stay ahead of the curve.
Luckily, there are a ton of resources available to help you learn and grow as a trader. Books, courses, webinars, podcasts, you name it, it's out there. And don't forget about the power of community.
Joining a trading group or forum can be a great way to connect with other traders, share ideas, and learn from each other's experiences. The more you learn about trading, the more confident you'll become. And the more confident you are, the better decisions you'll make.
So make a commitment to yourself to never stop learning. Your trading account will thank you for it.
Trading is a mental game, my friend. It's all about keeping your emotions in check. When you let your emotions take over, you're toast.
Develop a strong trading psychology, have a trading plan, and stick to it. It helps you stay disciplined.
Avoid impulsive decisions based on emotions. Follow your rules, even when the market is crazy.
Learn to deal with losses. Losses are part of trading. Accept them, learn, and move on.
Trading is a marathon, not a sprint. Keep your head in the game and never give up.